Hey guys, Max here, and it is of course Tuesday, which means it's time for our update of Monday's day of trading and a little bit of what happened over the weekend as well. So what exactly did happen? Well, almost everything fell. Of course, you probably know this though, and it was really damn bad. Investors lost money in pretty much every single sector. Off the top of my head, I think consumer defensives did okay, but not exactly brilliantly, and everything else fell. Crypto in particular had an awful day and practically collapsed not only on Monday alone, but actually over the whole weekend as a whole. We had a major development regarding Luna, Terra and UST. If you know, well you know, but if not, then it's pretty bad news for the crypto sphere as a whole. We will cover absolutely everything to do with the markets, to do with crypto as well, so let's just get right into it. So yeah, red everywhere as you can see. Stocks were really bad. Tech was bad as well, big tech in particular and semiconductors especially. Nvidia was down by 9%, that is a major huge hit. Tesla was down by 9% as well. Amazon was down by 5%. Major hits for tech in the entire sphere. Financials were bad too. Most banks were down from 2 to 5%. Healthcare was down, real estate was down, materials were down. Consumer defensives did okay. Most were steady and there were some gains there, but let's be honest, it wasn't exactly stellar. This also isn't too surprising. Companies like Walmart and Costco are, in general, expected to do a little bit better than other companies during recessions because they sell cheap stuff, right? So they expect to see more demand in recessions than maybe when people are feeling wealthy. That doesn't necessarily mean, though, that consumer defensives will always be a safe bet. Costco, for example, has a PE ratio of around about 40, so a really high value, and I wouldn't be surprised at all if that came down significantly. Energy did pretty poorly too, as oil prices fell, but we will talk about that in a moment. For the most part, that does explain why energy stocks fell, though. For American markets on the whole, the indexes, they were down bad. S&P 500 lost 3.2%, the Nasdaq was down by 4.3%, and the Russell 2000 was down by 4.2%. What really worries me there is the underperformance of the Russell 2000. It's doing almost as badly, pretty consistently, as the Nasdaq for the most part, and it's filled with companies that don't have the same draw to investors as these big cap tech stocks do, like Apple. So if they run out of cash, they need new loans or something in a recession, their prospects are far, far poorer than S&P stocks. The fact that the Russell is underperforming is, in my opinion, a very bad sign for a coming recession. What's happening across the rest of the world then? Well, it was also really bad, as you can see. Pretty much in every country, the markets just fell. In the UK, the FTSE 100 fell by 2.3%. For the rest of Europe, the Stoxx 600, it fell by 2.8%. Out east over in Japan, how did that fare? Well, the Nikkei 225 fell by 2.5%. Maybe then I hear you say there was some respite in the crypto sphere then. Well, no, there wasn't. As you can see, crypto was a sea of red too. Bitcoin is currently sitting below $32,000 and Ethereum at about $2,400. Both are only down a few percent from yesterday, but that's only because they fell so much more over the weekend. Of course, it wasn't long ago at all that Bitcoin was sitting above $40,000. Now this is how bad it was for the week. Bitcoin down by almost 18%, Ethereum down by almost 16%. Every altcoin down somewhere in that region as well. Sol, ADA, DOT, XRP, 99% of crypto is down. The little bits of green that you do see on that heat map are mostly just stable coins, so they're supposed to stay constant. But the big problem is in the bottom right hand corner. It is UST, but more on that in a moment. So what happened in the rest of the markets then outside of equities and crypto? Well, the US dollar continued to strengthen, rising slightly against everything once more. The euro is getting closer to dollar parity. That now is widely expected by most forex traders as the recession really kicks in. It's sitting at $1.05 each at the moment. The pound is down to $1.23 each, a very low level as well. Bond yields are still pretty crazy high, sitting pretty much at their 4-year highs. The US 10-year Treasury yield is at 3.03% right now, just very slightly lower than it was on Friday, but not by much at all. Oil prices fell, with WTI crude oil down 6% to $103 a barrel, and Brent crude oil sitting just a touch higher at $105. Gold fell slightly too, down just over 1%. It's now sitting at $1,850 an ounce, which is actually a nice level for accumulation of gold, in my opinion, so I'm quite happy with that. Why were stocks and equities so red then? Well, the same thing as we've been talking about constantly for months now. Fears of inflation, fears of Fed rate hikes because of inflation, fears of recession because of Fed rate hikes, fears of lockdowns in China making inflation worse, fears of the Russian invasion of Ukraine making inflation worse, fears of companies making less money because of all this inflation, fears of people losing money in markets, just fear absolutely everywhere. The new narrative that is being parroted by the big media organizations like Bloomberg and CNBC is what I've been saying on this channel for about 6 months or so now, that basically a hard landing is inevitable, that a soft landing is impossible, and what that means is that the only way to stop inflation right now is to crash the economy and put us all in a recession. Now, on that slightly somber note, what is actually happening with UST, with Terra and Luna, which I mentioned briefly earlier? What's actually going on there? Well, UST is a stable coin, which means that it's a cryptocurrency that's pegged to the value of $1, and that makes it very useful for people who trade in crypto. It's quite difficult to swap $1 for a certain amount of crypto. It's far easier to swap a certain amount of crypto for a certain amount of another crypto, and these coins allow people to keep money safe in crypto form while still easily trading them. UST is a slightly newer stablecoin that's based on new ideas. Stablecoins in the past were usually backed by US dollars. So if there are 1 million stablecoins, then they have that value because a company or an institution will pay you $1 for each of those coins, and they'll sell you more of those coins for $1 too. This is called a hard peg, and the idea here is that even if every stablecoin was redeemed at once, as long as they're backed properly, one for one, then there's no problem. Of course, this being crypto though, plenty of these stablecoin companies just lie about backing their coins and spend their money on yachts or flats and apartments, food, whatever they want, but that's for another time. UST though is a little bit different because it's an algorithmic stablecoin, or what we call a soft peg, that uses code and game theory, or really just market forces, to maintain a one-to-one USD value. Usually this works fine, but soft pegs can be overwhelmed by big sudden moves in markets. DAI is another soft peg stablecoin that has also seen de-pegging. Christ, that sounds absolutely awful, but they've seen that in the past. Now, UST achieves this peg by basically printing more coins when the price rises too high, so it increases the supply of the coin and that forces prices down, and then it does the opposite and it burns tokens or gets rid of them when the price goes too low, which reduces supply and forces the price back up. The really big problem here is that a few days ago, some very large investors sold more than $500 million of UST, which dropped the price slightly, just below its $1 peg. We then saw the value of a coin called Luna, which is part of that same ecosystem, and it's used to create more or destroy UST. Well, the value of that coin of Luna started to drop by a huge amount. Almost instantly, investor confidence in that project as a whole just fell off a cliff, and the reliability of UST's value as well collapsed. So we saw prices of both coins just drop off a cliff. At the same time, we saw the Luna Foundation, basically the organization that created these assets and tries to maintain them, they deployed $1.5 billion in an attempt to help UST regain its peg, which did help the situation slightly, but it's still not great. Now, once the market cap of Luna fell below the market cap of UST, the fear was that the coin was theoretically not backed by enough Luna to maintain that peg, and so investors were just terrified and they exited their positions. As you can see, the value of Luna, which has been a crazy good investment for many people over the last couple of years, has collapsed from about $85 per coin all the way down to about $30, representing a 65% drop over the course of just 1 week, which is an absolutely monumental loss for investors. The stablecoin UST, as you can see, had that major drama as well, with its value dropping below 70 cents for a moment before starting to rise back up. Right now it's sitting at around 92 cents, so the drama still isn't over. It hasn't retained its peg yet. Now, to try and explain how dangerous it is for a stablecoin to lose value like this, it's almost as if overnight your US dollars fell in value by 10%. Not like with inflation, where that happens over the course of a year, but a near instant decline where one moment you have your wealth and another it's down 10%. It's very scary, and it's probably cost people a lot of money, probably somewhere in the region of $25 billion of losses at the worst point of this whole saga, where UST was under 70 cents and Luna was under $30. So just because this is a crypto project and maybe slightly niche and something you might not have heard of in the past, the losses here are absolutely insane for just one weekend. Now, really quickly before I sign off here, I am moving into a new place over the next week or so, and so I might be just a little bit slow on getting the videos out. This will only last for about a week, and I will of course also have a new studio for you guys too. Again, it might take a few days to fill it out and everything to get it looking nice and proper, but I just thought I'd let you all know what's happening with that. Finally, regarding the new format I tried out last week where I also record my screen, I do want to go back to that in some amount. I'm not exactly sure how much, but I'm just awaiting on some new audio equipment because as of yet, the stuff I have just doesn't give me good audio quality when recording in that way. So that format will be coming back in some form or shape within a week or so as well. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord server, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to a site called Masterworks that can help you protect your portfolio against inflation through fractional shares of art from world famous artists like Banksy. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets tanking every day. It's completely free to sign up, so make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get over 7% interest on stablecoins to protect your hard-earned cash from being eaten away by inflation. Just be very careful. Of course, stablecoins are not always perfectly safe, as we've just seen with UST over the last few days. There is a risk there, don't get it wrong. Thank you all for watching, stay stoic, until next time.